There is nothing more rewarding than patiently accumulating a company while the market continues to sell it off. You've researched the business well. You understand the business is going to recover eventually, so you continue to buy shares on the dip, and all of a sudden, we have a huge rebound in price. The stock I'm going to talk about today is up, I believe it's over 100% over the last 3 or 4 months, and it is one that I do own and one that I patiently accumulated because I understood the business and its ability to rebound, and now I'm sitting on some pretty large gains from my purchases on the lows. I'm going to get into the bull case, the bear case, and my overall thoughts on this company, whether I would be adding more to it, even though I'm up as much as I am on the position. And in general, I'm just going to do a dive into this company so that maybe you understand the business better by the end of the video. It can help you make a decision as to whether or not you want to buy it. As always, everybody, there is that report down in the description below. 4 of my top holdings. You'll be able to see whether this stock is a top 4 holding now that it has surged in price so much. You can grab that for free in the description. And as always, everybody, drop a comment down below in the video. Let me know what you want me to go over next. And also, it just helps support the channel, helps us grow, and helps me push out more videos. So the company I'm going to be going over in this video is Bombardier Recreational Products. Now, before you click away from this video because you want nothing to do with Bombardier, I just want to let you know that this is not associated with Bombardier at all. This is a company that was spun off from Bombardier back in 2003 because Bombardier wanted to focus on the core of its business, so it split off through recreational products. This is its own entity. It is not associated with Bombardier whatsoever. Yes, it does carry the name, but it is a different company, an entirely different entity. So they sell products like Ski-Doo, like Sea-Doo, like Can-Am. It trades on the TSX under DOO and on the US markets under DOOO. So that's kind of a play on the company's most popular brands. And when I get into the bull case, you're going to really see how popular they are. So the company has over 2,800 dealers. And the crazy thing here is it operates in over 130 countries, which will come in again during the bull case. And I'm going to explain why this is so important. And if you don't quite understand the absolute dominance BRP has, it makes up over 33% of recreational vehicles sold worldwide. A single company, it controls over 1/3 of the entire market. But let's get into the bull case. And the first bull case I have here is just the dominant moat that the company does have. It is the #1 market share company when it comes to snowmobiles through Ski-Doo and through Lynx. It makes up over 35% of the market. And when you think about snowmobiles in general, it's kind of an oligopoly. Like when we think about it, we can think of BRP, we can think of Yamaha, we can think of Polaris. All of the major players in this space control over 90% of snowmobile sales. So this is as dominant of a market share as, say, the Canadian telecom companies, the big 3 telecom companies. So when we shift to water, they actually have a larger presence there. Their Sea-Doo products make up more than 2/3 of personal watercraft sales of this type. So it has an even larger dominance in Sea-Doo. If you see something out on the water, a jet ski or something like that, there's a very, very good chance it is a Sea-Doo. The company used to be into larger boats like pontoons, things like that, but it did end up selling off its marine division in 2024. It was not a very profitable segment of the business. There's definitely more money to be made in ATVs, snowmobiles, Sea-Doos, things like that. So when we look to ATVs, although BRP is not the largest player in the space, it's close. Polaris and BRP control the majority of the ATV market. And although Polaris is a bigger player in North America, BRP has been kind of slowly picking away at that market share. And Can-Am is becoming a very, very popular product these days. So what exactly does having such a large market share in all of these areas do for the company? Well, it creates brand perception, it creates the strength of the brand, and it creates a situation where newer players in the space, and by the way, the younger generation is getting into this space a lot more than they used to. The first thing they often see is BRP. that is because they have such a dominant market share. And this kind of boils down to the Chevy, Ford, and GMC debate. There are people who are die-hard fans of particular brands to a fault in some instances, and they do not stray away from that brand. This is much the same in recreational vehicles, and BRP has created an insanely strong brand base where a lot of consumers are introduced to them first and stick with them through thick and thin, really. Second bull case would be the product mix. The company has so many products that when one struggles, the other tends to kind of make up for that. We can look back to 2024 when we had a relatively soft winter and BRP snowmobiles really struggled. However, they were able to offset that to a certain degree through an increase in ATV sales. Obviously, it didn't offset the entire thing because snowmobiles are such a big chunk of this business, but it does help. And the fact that they have such a wide variety of products is going to make it less susceptible to a company that has a direct focus on one. The other element is that global economy, that global reach. If a particular country is struggling, you can often offset this with the success in another country. Now, don't get me wrong, if North America struggles, this company will struggle because that's where the bulk of its revenue comes from. But if smaller economies are not doing all that well, it can generally pick up the slack in other areas, and this diversity allows it to kind of reduce the cyclicality of the industry in general. Another bull case, the snowmobile market is supposed to grow at a 5% compound annual growth rate through 2023, and the personal watercraft is supposed to grow at a 6% compound annual growth rate through the same time. Younger people are buying recreational vehicles a lot more than they used to. Now, they're not necessarily doing this right now because interest rates are higher, consumer spending is down, but when interest rates decline in the United States and when they continue to decline in Canada, there is a much higher likelihood that people will open up their wallets and start to buy these vehicles again. Younger generations do not like to save money. There is a lot of statistical data that highlights that when money comes in, generally it goes out, and they love buying products like these, products that kind of give them the benefit of having experiences over saving money. So the younger generation is spending a lot more money on recreational products. And when interest rates come down, even though they might be cash strapped, this is something, if they can get financing for cheaper rates, that they might still buy. And it was, in fact, a big trend during the COVID-19 pandemic that ultimately did slow down, but did not go away completely. Don't think that is the case. So the bear case would obviously be that economic sensitivity. BRP has gotten hammered over the last while due to higher interest rates. It costs a lot of money to finance these vehicles. So when rates are 8, 9, 10%, people just aren't going to do it. When rates decline, it becomes a lot more attractive. But this company is cyclical. People, when they're struggling to keep their jobs, when they're struggling to pay their rent, are not going to run out and grab a snowmobile. You need a thriving economy in order for this stock to do well. Now, yes, it is up 100% off of its lows 3-4 months ago, but we are starting to see the improvement in the overall economy and discretionary spending opening up a bit, which is a signal that this company could be on its next leg up, but economic sensitivity is no doubt still a risk. So the other one, and I spoke about this before, seasonality. One bad season in a particular area could really impact this company's results. Obviously, we had that soft winter back in 2024. It really hurt BRP snowmobiles sales, and ultimately it really hit the company's earnings. We could get a situation where there is very, very bad weather during this summer and not a lot of people are going out on the lake. Not a lot of people are using these Sea-Doos. Not a lot of, personal watercraft renters are buying these because not a lot of people are renting them to go out on the water. Seasonality does play a big impact on its results, and obviously we've seen a lot of situations recently where weather hasn't exactly been predictable. Even in the situation of wildfires here in Western Canada, you could get a lot of people who do not choose to travel to, let's say, British Columbia and go out on the water. So they might defer that purchase because they can't actually get to the area that they want to go and have fun. So environmental impacts, power sports vehicles are not as heavily regulated as passenger vehicles, and there's a lot of scrutiny because they are not very environmentally friendly. There's a lot of emissions from them, things like that. There could be further regulations placed on these vehicles that will require these manufacturers to become more efficient energy-wise, consumption-wise, emissions-wise, and as a result, that might impact margins because they'll have to spend more money to get emissions down. Now, BRP has kind of tried to offset this by getting into the electric vehicle market, but it is still very early in this case. They're going with electric bikes, etc. They're a long way from making this a core element of the business, and right now it still does rely a lot on gas-powered recreational vehicles. The final bear case I'll go over here is obviously input costs. BRP had a lot higher margins during the pandemic and even before the COVID-19 pandemic, but what happened was inflation hit the company very, very hard. When you think about these vehicles, they have a lot of input costs. You have aluminum, steel, plastic, leather, things like that. Any sort of cost increases to these will ultimately hit the company's margins if it can't offset those costs and pass them on to consumers. Now, typically it would be able to do this. However, it kind of got hit with a very poor macro environment and very high inflation, and it couldn't just decide to raise its vehicle prices 20% when it was struggling to sell them anyways. So it ended up taking a big hit in operating margins, which, as you can see by this chart, are quite a bit lower than pre-pandemic. However, we could be on the next leg up here, as I have mentioned a few times, and if that is the case, we should see growth in margins due to increased demand and lower dealership inventories, allowing them to move a lot of products out without having to mark them down so much. Dealership levels are normalizing, which should result in an increase in margins. So my overall thoughts on this company: obviously I own this company. I absolutely love this company. I do believe they are the best recreational vehicle maker on the planet, but the one caveat here is I understand this business very, very well, which allowed me to kind of understand what the situation was with the business and the economy in general, which allowed me to accumulate shares at rock bottom prices, whereas somebody who does not understand this business very well at all might get spooked by the fact that these companies can often go through 50, 60, 70% drawdowns, and you need to be willing to buy them at these prices to realize truly outperforming returns. Now, if you did accumulate BRP during the lows here, you are already up 100% over a 3 to 4 month time frame, and I would argue that we are not even at the start of an upcycle here when it comes to the economy. Now, it could get worse, but there is definitely some signs here, and I've seen it from a lot of cyclical companies. I've seen it from TFI International to a certain extent. I've seen it from Boyd Group Services, and now I've kind of seen it from BRP that they are seeing a turnaround in the economy. And if this is sustained over the next few years here, BRP is very cheap even at prices today. It reissued its guidance. It pulled it last year after downgrading it numerous times because it really didn't know what was going to happen. If it can manage to hit the upper end of its guidance for this year, it's trading at only 19x forward earnings. And when we consider the fact that if there is a pickup in activity in recreational vehicles, it is highly likely that these earnings continue to grow at a double-digit pace. So if you can get this company for 19x forward earnings, I personally view that as relatively cheap. Now, obviously, there is risks here. We could very well see more economic pressures moving forward. So my thesis here obviously depends on a rebounding economy. We need a pickup in discretionary spending from consumers, but I do believe this is a quality company that should be able to perform very well moving forward. It needs to fit inside your portfolio. You need to understand the risks of this company, and before you invest a dime into this company, you need to understand the business very, very well, so you're making decisions based on the business and not on the fact the stock has gone down 50% in a month or has doubled over the last 3-4 months. So everybody, that's it for the video. Hope you liked it. Head down below, grab that free report on my top 4 holdings, see if BRP is inside there, and as always, head down below, comment, let me know what you want to see next, and like the video, subscribe to the channel. Obviously, all that helps me develop more videos and helps me bring you content that you want to see. And as always, stay tuned for more great Canadian content.